Hi there, it's the 12th of October 2018. It's a Friday. Of course, it's the day after the big sell-off. Day 2 of my diary. And the first one went okay, I think. I rambled on a bit, but thanks for the feedback. Much appreciated. I'll go through some of the feedbacks for the questions I've had. And by all means, if you have any questions, anything at all, please put them below. And rather than me type a response, I'll just sort of address them in the next video. So a couple of things I've had is people saying, I like it a lot. Talk about your losers more. You're right, you know. I talked about Jangada Mines, and yes, I'm down sort of, let me just check what I'm down on that at the moment. So I'm down 28.8% on that. And it looks today like I'm looking at the sort of American markets. It looks like they're going to open up positive. So we're having a bit of a bounce. Will it last? I don't know. I think it's a correction. I think we will run into the year end looking quite good. After 2 deals done, Brexit and Trump with the Chinese, hopefully. But Jangada, I mean, you know, John has said, hi Justin, I'd be interested to know your thoughts process for keeping a share that you hold that is down and when maybe time to call it quits. With Jan, looks like things should improve back up now. Yeah, well, that's it. As the story changed, that's what I look at, you know? Because Jangada Mines at the moment, the reason why the share price is down where it is, it's not because of the project. It's at a corporate level, they've messed up a little bit, you know? The fundraise took too long. They didn't come to the market. They IPO'd with too little cash, so they had to go to the market early. People knew about this, and the share price kept grinding lower and lower and lower. And they knew they had to raise money in the market, of course, via equity at a discount, and this was just pushing the share price down, and it was held too late. And now they've done a fundraise which isn't ideal. It's got warrants attached, and that's not a good thing. I mean, I'll explain why. I don't know if you know what a warrant is, but essentially, if let's say you're offered to take part in a placing in a equity fundraise, as an incentive, you're offered a warrant. So let's say, keep it simple. Let's say the share price is 2p, and you're offered a warrant at 4p. So every one share, a 1 for 1, every one share you're given a warrant. All right, and that means if the share price goes above 4p and it goes into money, then you could take up the option to have those shares, take those shares, those warrants, buy those warrants, and there's no risk to you pretty much. So you don't have to buy those shares until they're above that sort of strike price. Now, what people tend to do in a fundraise is they will obviously buy the shares initially, get the warrants attached, but they'll sell their shares straight away because obviously they've been issued shares at a discount to the market, so they can flip them straight away for a quick profit, and they'll just sit there and they'll exercise the warrants if they come into money. So, of course, there's a lot of downward pressure on the share price. That's the issue with the funding. But like with Jan, the reason why I haven't sold, I mean, I prefer not to be 30% down, but the story hasn't changed. The project is still a very good project. We're talking, a sub 6 million market cap. That's how this company is valued at the moment, 6 million, And you've got an NPV, net present value, on that project of close to 200 million. It's very efficient. It's 67% internal rate of return. And it's in a good jurisdiction. It's in Brazil. And the metals it's in as well are very good. Palladium, I mean, it's PGM plus gold. So PGM metals. But it's mainly palladium, not platinum. Palladium is good price. There's copper, there's cobalt, there's nickel. Plays into the EV market. So I like the project. And everything that's happening there is at a corporate level. That's what's messing around with it. It's not the project. I just think at the moment, do your own research, not investment advice. It's cheap. And you may say I say that because I'm down on the shares. But I do believe this to be, a potential multi-bagger over the years. So in answer, John, essentially a long answer, I don't sell if the story hasn't changed, to a certain extent. If something's changed, you could say it's changed on a corporate level. But Brian, the guy in charge of the company, he owns a big chunk of stock too. So he's feeling the pain too, Probably less pain than me because he probably got them at a cheaper level, but he's feeling the pain. John says, I'm a regular listener to your podcast. You talk about buying opportunities during times like this. There's been good money to be made going short this week. Do you have a shorting strategy? I don't, John, no. Generally, I'm an investor. I'm not a trader. So I look for companies, businesses, I think can give me a good return. I get a kick from finding a company that has potential, upside potential. And I'm not a trader, and I'm also not a fan of the risk-reward ratio with shorting. In a share, if everything goes wrong, you lose 100%. All right, I know it's bad, but you shouldn't lose. If you apply my risk method, which I try to do, and that's don't expose yourself to more than 10% of your entire portfolio in one stock, which I'm at with Jangada now. Then if it all goes wrong, I'll lose no more than 10% of my portfolio. If it all goes wrong, it's very rare, but you've got to prepare for the worst. Like, hope for the best, prepare for the worst. With shorting, it's spread betting to a certain extent, isn't it? And so you can lose more than you can gain, and also the maximum you can gain if a company goes bust is 100%. Whereas if you go long a company, you can get multiples of 100%, which I've done on small cap stocks, you know. So in answer, you can make good money, yeah, but it's also quite risky. I'm like, for example, I know lots of people were shorting Vasarian and saying it's overvalued, and that's a popular thing to do. Either company people either short companies they think are going through, or having trading issues, or are overvalued. People thought Vasarian is overvalued. They may, you know, on traditional metrics, it probably is. But the momentum of that company is very strong. And I know people have been shorting that below £1, and it's got up to 180, you know. So that's a dangerous game to play. You're playing with momentum. It's an unknown force, very strong. So good luck with that, you know. I mean, if you are doing shorting, spread betting, it's leverage, you know. It can be very risky, so be careful with that. Apps, this is from Bobby Larrow. No, Babalaro. I love that name. Babalaro. Justin, this last video was 10 out of 10. Spot on, mate. I've just watched it in the shower before work. Really? I like this a lot. Lots of love and huge support for this type of thing from your biggest fan, beginner trader. Thanks very much. Bradley, I've just run out of cash, but regardless, I think value will win. Yeah, value will win out. You're right, Bradley. All the stocks I've got have a real story. I think today's losses make you look deeper into each story, and that is the real test. True, it is, and it's a story. Yeah, good stories, and you know, good economics. So as far as losers are concerned, my biggest loser I'm looking right now is Utilitywise. I'm down 36% on that company. I'm not ploughing any more into it. It was a turnaround. Listen, people talk about revenue and profit generating stocks like they are superior to any other stocks in the market, you know. Utilitywise is that. I went into it because I think it was a good turnaround story. I've been hammered more on revenue and profit generating companies than any other company, you know. And Utilitywise has been a turnaround story for ages. UTW. It's what, 20 million market cap. The turnover next year is going to be about 60 million. They've gone through a board change, everything. Restructuring. They've thrown the kitchen sink at it. They've changed accounting principles. But it's been a nightmare. Absolute nightmare. And the thing is, with revenue companies, what you get is a trading update normally, where they say it's a profit warning. That knocks the share price. Then a couple of months later, you get, 3 months later, you get the interims or full year results, which just shows the extent of the damage. Takes the share price down again. They also say, by the way, it's going to last a bit longer. That always happens. You know, they always try and be optimistic in a bad release initially. And then you get another trading statement and say, yes, it's still going through the mill. And so by the time this goes on, you're talking about a year and a half of really underperforming share price. And so it's revenue generating stocks is a nightmare to come out, to wash out through the accounts, you know. So that is my worst performance share. Cora Gold, one of my picks, down 24%. I still see, and the thing is with small caps, the lower this goes, market cap, the more potential it has. Now it's down at 5-6 million. This is going to be a standalone mine, their main lead asset, you know. And I've written a blog on that. By all means, have a read up on it. A blog on them, and they got some big, you know, successful mining people on the board and as shareholders with lots of money, and they know their stuff. And this took a knock, and I don't think it was warranted. Anyway, those are my top 3. Utilitywise is the worst. Jangada's next. I won't be putting any more money into Jangada, but I do think, you know, in a year's time, sentiment will change. We're talking about bad sentiment here and a corporate funding that went wrong. Once that clears, I think that it's compelling upside. And like I said, I'm down 28%, but it hasn't changed. I think that's it. I'm going to try and keep it short. A couple more messages. Linda, I bought my first AIM stocks in August. Properly researched. Yes, they are all down across the board. I bought all of them, bar one, because the investment is sound, and I did my homework. I didn't expect a windfall in a couple of months, and to be honest, I'm a bit bemused at long-time investors panic selling at a loss. Yeah, the advice I'm gleaning from yourself and others is priceless. Thanks, Linda. Yeah, do you know what? Like I said, you know, investors make more money than traders. Full stop, right? Because time is on your side. If you invest in a good company at a good valuation, time is on your side. Yes, you'll have, you know, fluctuations, short-term fluctuations, which you can't predict. That's the problem with traders. They go into something and they have something happen like yesterday, you know, and you can't see it, and you can lose money. But investing in an underlying asset of a business that can improve over time, that is the way forward. Time is on your side as an investor. And with traders, you've got very short space of time which to deal with. Obone, like the last video, good to bring a wider macroeconomic factors. Thank you. Informative, honest as ever. For balance, mentioned some of the problem shares. I just did that. And Kim, thanks, Justin. Finding your commentary very useful. I found the best bit of follow or forget was the general discussion about the markets. I'll be doing a follow or forget, I think, once a week on a Wednesday, I think, if you're up for it, if you fancy doing that. By all means, subscribe, ask any questions below, and I'll deal with them in the next issue. But at the moment, I'm feeling quite bullish for my stocks. I mean, they haven't bounced massively today. I've got about 3 stocks up. It's not very good looking, but I've done well over the last several months, so I've got to take a hit. You've got to take a hit now and again. But the cycle is like in my head, always learning, always trying to get some lessons. When your portfolio is an all-time high, start selling. And then squirrel that away, and then all of a sudden the big sell-off happens. Then if you want to, top up on shares you really like, that you see massive potential in, that you've well researched. That's what I'm going to be doing. That's what I did this time, to be honest. I think towards the end of the year we'll be fine. But beyond that, I'm a bit worried. Thanks very much. Like I said, comment below, and I'll get them in the next video. And by all means, subscribe, and you'll get them. If you hit that little bell button next to the subscribe, you get it via notification to your phone, apparently. So if you do that, thanks very much, and share it if you could. Cheers.